all of these questions on taxes and real estate and capital gains. And today I'm going to share with you the 6 big benefits of investing in real estate and how you can take maximum control and advantage of all the real estate tax benefits that are out there just waiting for you.
Everybody, before we start watching this video,
we are not tax advisors, or
we do not give tax advice.
We do not give the advice of the taxes.
We are not professionals in tax.
Take us to your leader. All right. So we are here to talk about probably one of the most enthralling topics in all of real estate land.
Get ready.
Taxes! Oh my gosh, so much excitement, right? I mean, so here's the deal, right? I mean, taxes. Just because I hit you doesn't.
Yes, it
yeah.
does.
Okay. Probably.
All right. Cool. Guys, taxes. How do we stay excited about taxes? What is it that taxes provide? Why do we want to talk about taxes?
There's only one reason to be excited. The exciting thing is real estate does 100% give you hands down the best tax advantages the country has to offer. We get to be these blessed Americans in this country. If you're not from America, then come invest in our real estate and get some of that real estate action. For those of you that live here, there are a ton of tax bennies that you pick up along the way. We're going to talk about 6 of them.
Tax bennies. Is that Benjamins or is that benefits?
They can totally 100%
either way, right?
Benjamins.
Okay,
so.
Either way, tax bennies. Guys, first of all, interest write-offs. Now, you know that when you pay a mortgage payment, there is a portion of that is interest. That interest that goes into your real estate every single month is write-offable. Is that a word? Is that a verb? Write-offable?
It is now.
I like it. Write-offable.
Yeah, it's write-offable.
Okay.
Now, the reason why that's really important is because your property is producing an income. If I receive $1,000 of rent, but I have to pay $700 in mortgage, then the IRS is going to look at that and they're going to say, oh, well, we're going to allow you to write off the interest. And you might say, well, I would expect that. That's a business expense. It's cool that it is classified that way so that it can be treated as a business expense. But then tax benefit number 2 that stacks on top of that is what's called writing off the depreciation of the property. And as we break this down, what that ultimately means, and this is really big, it means that you can show a loss on paper while you are taking handfuls of money and putting them in your pockets. Okay, for the first several years that I became a real estate investor, I did not pay taxes. And the reason why is because I got to write off the interest, but I also got to depreciate the property.
And then he spent 4 years in prison. No, I'm just kidding. I'm totally kidding. No, guys, taxes. This is the cool thing about real estate and taxes is it can really allow you to pay. Like Kris said, sometimes you can almost pay nothing. Sometimes you can pay nothing in taxes because of all of the wonderful things you're taking advantage of. The interest write-offs, the depreciations. By the way, on a home, on the structural. On the structure of the home and the structural upgrades on the home, you can write off or depreciate that over 27 and a half years.
Let's break that down. Let's say that you had a $100,000 property. Then the IRS will allow you to break that out over 27 and a half years. So take $100,000, divide that by 27 and a half, and that's what you get to write off every year. In that situation, that would be right around $3,000 a year. So here's what that means. If I were doing my math and it's like, oh, let's say that I made $3,000 of money this year of cash in hand after I paid my mortgage, then if I'm also writing off an additional $3,000 in depreciation, I kept $3,000, but it looks like nothing to the government.
Right.
Depreciation is a really, really, really big tax write-off when you're holding real estate long term. Now, at some point, you're going to have to sell property. When you do, there's going to be what's called a capital gain. And the capital gain is any money that you make above and beyond what you kind of put into the property.
It's capital. It's money, right? It's money gain. This is income.
Yeah. So if I bought the property for $200,000, I sell it for $300,000. That movement from 2 to 300, that $100,000, that's called the gains. And they want to tax me on that. And we're going to show you how you can get out of some of that legally and lawfully with some of the amazing tax loopholes. Here they are. Number 1. Tax defer it through a 1031 exchange.
Yeah.
It's a special code that gives you a few months after the sale of a property to say, hey, I'm filing a paper that says I'm going to do this special 1031 and I'm going to take it and I'm going to put it in a similar type property. And what you're basically saying is instead of paying the taxes now, I'm going to defer it and roll it into my next property. And I forego paying those taxes today. And instead, I get to roll it into my next property, continuing to pay me. Now, rolling that money in actually pays even more of it down, expands your cash flow. And guess who's even richer in real estate now? you are.
So I want to talk about this real quick, and I want to talk about this in terms of a 401k. We've had other videos where we talk about 401ks. And by the way, a 401k, one of the good things about a 401k is it helps you to defer taxes, right?
Dude, you found a positive.
This is amazing, right?
Dude, I'm not gonna high five you.
Okay, it helps you
Still
defer
401k.
taxes, but what real estate does is it's actually a much better tax deferment strategy. Rather than putting your money in a 401k to defer those taxes, put it in real estate and then roll it over into more and more and more real estate through a 1031 exchange and defer those taxes. It's amazing.
Now, there's another way to defer it. Let's say that a 1031 is what you do when you sell a property. How do I defer any taxes, period, but still get money out of the property? You can do that through a rate and term refinance. If you do a cash out refinance on the property, the money that you get, a refinance on a property means I'm keeping the property, I've got equity into it, I'm working out a deal with the bank where I'm going to extract some of that, so I'm going to get this money cash in hand and keep the property. Normally it's like, well, you got more money, you should pay taxes on that. If you buy it, if you pull it out through a refinance, it's actually tax deferred. So this is another amazing strategy for now, not just having to sell the property like with the 1031. This one is I get to keep the property and I get money and I don't have to pay taxes on it. And I could either do, well, I could do whatever the heck I want, but I can also roll it right back into real estate and keep expanding my cash flow. So this is another amazing tax strategy that comes with real estate.
Friends, if you're doing real estate and if you're doing it the right way, then your real estate is a business for you. And so one great thing about having a business that you're operating is there are business write-offs also.
Like for example.
Yeah, go ahead.
Well, like your cell phone, right? Are you going to talk to a tenant or your property management or a member of your team? That's part of your tax write-off. Or the vehicle that you drive, where are you going?
Yeah.
Right? On a business leased automobile, you can write off the entire lease expense in the name of a business. And there's others as well. You can use up to a certain percentage of your home as a home office. And all of a sudden it's like, well, depending on how much you're paying each year on your house, there's a percentage of it that you can say, hey, I don't have to pay taxes on that either because I have this amazing legal and lawful business.
Absolutely.
My clothes that I'm wearing, I could not do business without this clothes. So these clothes is important.
These clothes,
That is,
they're amazing.
Yes.
I don't know what
Big
that is.
benefits.
Anyway, it's so
That was some
fantastic. So the last one here that we want to talk about is 2 to 5 years of PR Shield.
You can't remember. It's
I
okay.
have no idea what that is.
For those of you, we have little cheat sheets to the side of the camera. I mean, we know this stuff, but we have to keep ourselves straight. And Steven doesn't know what that last code means. He sucks. Oh my gosh.
Taxes!
All right. Okay, the sixth and final benefit is a really special code for those of you that are actually living in your home. That is your primary residence. And normally when you sell a piece of property, you got to pay capital gains. But there's a special code that says in the last 5 years, if you spend at least 2 years living on that property, then we're actually going to exempt you from any capital gains. Now this was huge. When I bought my first property, I bought it for $110,000, ultimately sold it for around $165,000. And so there was a $55,000 gain on that property, but I didn't have to pay a single dollar in any taxes on that increased value. And the reason why is because of this amazing code, which is why we always recommend that even the home you live in be treated as an investment and as a part of the greater investment plan and strategy for your real estate empire that you are building and growing. So friends, this was our video today on the major different tax benefits and tax write-offs for capital gains and real estate in general. Another one of the reasons that I love real estate. So if you feel like you're paying too much in taxes, you likely do not own enough real estate. And you know what? Steven and I, we can take care of that. Click this link in the top left corner up here, and what we'll do is we are going to lay down a custom game plan for you on how we can get you into more profitable real estate, can give you more cash flow, feed your retirement, and get more of what you need in life while eliminating your taxes.
We're going to increase everything except for your taxes.
Yeah, and we might not be able to decrease all of your taxes, but we can absolutely add an incredible expansive benefit to paying less taxes.
And if we can keep doing this, Nate will never shut off the camera ever.
And make sure that you subscribe and hit the bell. It's time to get yourself some real estate going and start taking advantage in and cash in on those tax advantages, because you can make your next year way more tax advantageous. Click the link up here, contact me and my team, and we'll start making it happen and dishing up the good real estate for you right now.